Good day, YouTube. This is Jay Money with Following Forward Financial. Just another stock split video. Meant to do this one a couple days ago and didn't get done, but it still might be relevant to you. But stock splits are getting a lot of attention this summer. Amazon, I've covered a couple times. I've bought some Amazon. I had Amazon before the split. Just completed its 20-for-1 split. Another one that I'm looking forward to is Alphabet or Google is doing another 20-for-1 action coming up fast. I believe July 8th or somewhere right around there. Shopify approved a 10-for-1 split, and Tesla's on board of directors just signed off on a 3-for-1 split. The four stocks have been clobbered despite the hype so far in 2022. Amazon is down 36%, Alphabet down 26%, Shopify has cratered 77%, and Tesla is off 38% as of this writing. But another tech stock is splitting and outperforming peers is Fortinet. It's on the NASDAQ FTNT. The cybersecurity giant announced the details for a 5-for-1 split on June 9th. To little fanfare, shares have been beaten up a little, down 25% in 2022. But business is booming, and here's why to buy now. And just to take a quick look at Fortinet, it's currently at 59.13, and this is after the split, so you can kind of see what they've done over the last year. They're up over 21, we'll just call it 22%. In the last 3 months, down 8.3%. In the past month, up 4.31%. In the last week, it's up 7.16%. And here's a look at today, up 4.1%. So overall, it's done a lot better than a lot of other stocks out there that are totally in the red. But this one's got a lot of green to it. But they provide cybersecurity solutions to a variety of businesses such as enterprises, communication service providers, and small businesses. It operates through the following segments: network security, infrastructure security, cloud security, and endpoint protection. Internet of Things, which I've talked about a lot here on the channel, or IoT, and operational technology. So definitely everything here is a wave of the future, and that's what I look into, is what's can we make money off of in the future. Definitely Internet of Things is going to be there. This was founded in 2000, $47.46 billion market cap. The high today is $59.37, low of $56.38, so a little bit of play in there, almost a $3 swing if you wanted to trade it. Again, I don't give tax, legal, or trading advice, just stating my opinion. The 52-week high is at $74.35. And the low is $47.27. Average volume is 6.2 million, and volume today looks like 8 million, so a little bit above, probably since the split. And this one's not too bad of ratings on it, 64% here on Robinhood, and earnings expected after the 4th, after hours, August 4th. So you can look at their last couple earnings. Looks like they beat looks like they've beat all of them. So should be a good turnout on the next earnings. So just have to wait and see. But a data center upgrade cycle boosts Fortinet's prospects. Fortinet shares were divvied up on June 22nd, leaving shareholders on June 23rd with 5 shares for every one that they owned prior. As a reminder, the share price will also be divided by 5 to adjust accordingly. Off the value of Fortinet as a company is not changing. And so just thought this was kind of an interesting one. I don't have any of this stock, but worth looking into now. So since the company's initial public offering in 2009, Fortinet's stock price has increased a whopping 3,140%. A 2-for-1 stock split occurred on 2011, so not too terribly long after it IPO'd, they did a stock split. And why the split now. There are a few reasons. Fortinet might simply be trying to raise awareness of its businesses, which makes sense given as a little-known company, but actually the second largest standalone cybersecurity company. Definitely another wave of the future is cybersecurity. Behind Palo Alto Networks, stock split may also help a company manage its stock-based compensation paid to employees by increase liquidity to manage share repurchases. Regardless of the reason, simply remember Fortinet's valuation will remain the same after the stock split. Just like any stock split, valuation remains the same. It's just like taking a $20 bill, and if you're going to do a 20-to-1 split, it would be worth, each share would be worth $1. So hopefully that's the best analogy that I can give, but it's just still going to be $20. It's just split up into 20 different pieces, and so that's about the best analogy that I can give, or otherwise you can just Google it, but it's pretty simple. So though the share price will be smaller, it does not mean the stock is cheaper, especially not in a world where it's common to be able to purchase fractional shares at many stockbrokers. So you can do fractional shares on M1 Finance, on Robinhood, on Schwab. There's quite a few of them. You can buy partial shares. So here's what it's important to know. Fortinet is growing at a brisk pace right now. Revenue is up 34% year over year in the first quarter 2022 to $955 million, and management expects full year sales to be up about 31% in the wake of the pandemic. And amid roaring inflation, organizations are looking for ways to strengthen their efficiency. This has them leaning into cloud computing, which means increased data center construction and upgrades, and internet-connected devices and software to keep whole patchwork and networks and machines safe. So definitely cybersecurity is a wave of the future and a good way to make money. Just as long as you're in the right company and right stocks. So cybersecurity is a fast-changing area in the IT world. Lots of companies in the space have fallen by the wayside over the years as trends have changed. Though its roots lie in firewalls, traditionally a device that monitors traffic within a physical location, Fortinet now derives nearly 2/3 of its revenue from software and recurring service. It is still making investments in new areas. For instance, it recently announced it would be exploring security for quantum computing in collaboration with Singapore's quantum engineering program. And definitely invest in high-quality, profitable growth. Which you could say that about any sector or any stock, so highly profitable. So they are a high-growth security company, also highly profitable, a free cash flow of $1.21 billion over the last 12-month stretch, a 34% margin, part of Fortinet's success. Self-funding new growth initiatives has a lot to do with its discipline and keeping expenses to check, so that ample resources are at its disposal. So definitely one to watch, but currently it trades at 37 times trailing 12-month free cash flow. Of the other big tech stock splits this year, Alphabet trades for a cheaper 21 times trailing 12-month cash flow, but Fortinet growing at a faster rate. If the stock splits have your attention, Fortinet is more than worthy of being added to your watch list. So definitely one to watch. But don't take my word for it. Take the article and just do the research yourself. Again, I don't give tax, legal, or trading advice, but you can leave in the comments what your thoughts are on Fortinet or Apple or Amazon or Shopify or Tesla or any of the splits. And if you were in doing the splits, get it on any of these stocks, so just don't hurt yourself. But like I said, I have Amazon. I got a little bit of Alphabet. Back to the buying partial shares, I bought some Alphabet on Schwab, so I have it in M1 Finance as well. So looking to get into Shopify and have some Tesla. Definitely want to get more Tesla, and that's a long-term hold as well. And now I'm going to be looking into Fortinet, FTNT on Monday. But that's it for this one. Like I said, I don't give tax, legal, or trading advice here on the channel, and just state my opinion. And if you haven't smashed that like button yet, go ahead and hit that for me, as well as subscribing and hit the bell so you're notified of when the next videos drop. Again, this is J Money, Falling Forward Financial. Happy trading, happy investing, stay green. Cheers.